Okay. All right. So we're good to go. All right. So we're integrated imagery. This is just a quick recap of our overall performance for the simulation. I'm Gregory Walker, and then
And William Porzel.
yeah, we got William. So we'll jump right into it. So the first thing that we're going to talk about is this chart here, which covers our total annual revenue. And as you can see, there was a positive upward trend, nearly the entire simulation. So we did have a few hiccups. Year 11 and year 14 were, some of those small dips that we took, but we instantly bounced back that next year and didn't suffer that great of a loss. So whenever we did notice, a slight error, we'd recorrect and we'd be good to go. But overall, positive trend. And I'd like to note that we were the first company to hit $1 billion in revenue. So, all right. And you'll also notice mainly these next two charts will also, there's a correlation between these and the revenue. So like, year 11 and year 14, again, you notice a small dip. So there's definitely a relationship between our revenue and the other key metrics. But overall, again, we continue to increase our EPS throughout the simulation. And, we were fairly happy with the way that we performed in that way. So then here's the trends in ROE. This is slightly more inconsistent, I'd say. There's more variation, but again, we still have the positive trend upwards, and we were still climbing. So nothing to be disappointed about. All right, that's Trey.
This is our trend in the annual credit rating. As you can see, we reached an A in our credit rating very early on, but we never managed to get that A plus, partly in due because we were actively taking out loans so late into the end of the game so that we could do some stock repurchases to catch up with Team A and their head start that they had. But we also were kind of worried that if we went up to A plus and then went back down, that it would negatively count against us. So we were kind of comfortable staying in that A range the whole time. And then I'm gonna click. Trends of the year and stock price. As you can see, the stock price kind of went the same as the ROE, and the year 14, we went down. That was the year that the real life stock market took kind of a nosedive, and it affected our game pretty heavily. And then year 11 and year 12 is when we started to realize how powerful the stock repurchase was and that we could take advantage of it to catch up with Team A. And next slide. Trends in annual image rating. We did take a little bit of a dive in year 12 and year 11 again. We rose up super hard at the very beginning of the simulation. We peaked at one point and then we kind of plummeted down because we tried to change our prices, because at first we were like, what is Team A doing that is making them beat us? Like, how are they rising so well? So we tried to raise our prices and do a bunch of stuff that messed with our image rating, and then we returned back to our previous strategy and then started messing with some stock purchases, which messed with our image rating again in year 14, especially with the real life stock issue that happened. But year 15, we were able to pull it back out, luckily.
All right, good deal. So now we're under a strategic vision, and what we believed, the tagline that we believed really encapsulated, our vision and where we wanted to head was fly high, reach out, and capture the moment. So flying high means, setting high goals, setting high standards. Reaching out means, we're taking action, we're leveraging, all the opportunities, all the advantages that we see. And then capture the moment means that, we're achieving those goals, we're hitting and getting those results that we wanted. So really, I thought of kind of three main categories in terms of our strategic vision and where we wanted to head and what we wanted to do. And the first one was market share. We wanted to have the greatest market share, and we really started gunning for this towards the end of the simulation. Our goal, we really started playing offensive, and we were trying to, attack other teams by taking sales away from them with really competitive pricing and quality, just trying to attract as many customers as possible. And then something that ties right into that is unbeatable product offerings. So we were really focusing on a great ratio of quality to pricing, meaning, you're getting a great quality for some of the lowest prices. And then we really, from the start, we focused our efforts on maximizing our brand recognition. So we were one of the biggest spenders on advertising from the start, just to really kind of create separation and get our name, get our brand out there more than other teams. So these are our future performance targets. This is based off the historical data from the last 2-3 year plans. So following a similar pattern, and EPS, we would look for this common increase, and we could easily achieve many of these things. Now the image rating, we would leave at that kind of lower bracket, because I believe we achieved a 85 or maybe 84 last year, the previous year. So overall, but this is the performance targets that we would shoot for. And like I said, it's based off the historical data that we've had. And I'd like to note that we did achieve or overachieve on all the previous performance targets. So this is kind of following that same pattern.
Alrighty, so the AC camera competitive strategy. We felt that our strategy was really good for the way that we were running our businesses, like the actual product itself and the way that we were marketing and branding. So we would continue to utilize our larger facilities, which, by the way, were almost twice the size of every other factory within the simulation. And we would use those larger facilities to keep costs at a minimum and provide the best offer for special contracts, which is what we considered to be our ace in the hole. It was our biggest strength, was that we locked down the special contracts. Offer the best PQ rating relative to the price range that we were in. There were people that had better PQ ratings, but they also had much higher price ranges. And then further maximize our market share until 50% is reached. GoPro in the real world has like a 49% market share on action cameras. So we were attempting to be the GoPro of our simulation. And then if you want to click on to the next one.
All right.
Then we have the UAV drone competitive strategy. And once again, another successful company that we were running. We would stay the course that we've already established. We'd use our competitive pricing. This one, we kind of ran more on the average of what everyone was doing, but we still had a top-notch quality and an already sustainable business model. But when we would reach the 50% with our action camera, we would then try to do the exact same thing with our UAV drone and get a market dominance with UAV instead of just being, I think it was like 12% of the market. And then we would focus on growing our company beyond the current limit, getting that 50%, increasing our market shares, having another 50% company. And then at that point, we just basically control all other than regular camera markets. And then we would also increase our profit margins through cost reduction by having larger facilities, because we would be creating 50% of the instead of 12. So we would have to increase our facilities, which would do the same thing that we were doing with our action cameras and bring our costs down so our prices would lower.
So our production strategy was pretty straightforward. We were trying to maximize our efficiency, our productivity, while also taking into account our profit. So, and we actually realized this unique relationship is actually the inverse between the UAV drone segment, the workforce, and then the AC camera workforce. And we realized the more money that you put in the workforce for the UAV drones, the more profitable and the more productive they'd be. Now for the AC cameras, it was different. You couldn't maximize your profit like you could with the UAV drone if you put everything to the max. So really you kind of play on the lower end. As you can see, our average, or our company spending was much further below the average, the industry average for compensation. So that was the best in terms of efficiency and profit. And we thought it was interesting. We actually had a few good laughs about it. Anyways, another one of our strategies was to minimize our overtime, and based on the projections of that year. So we would do this through adding, workstations, and then also utilizing the robotics upgrade because that cuts down the amount of employees you have to have at each workstation. So overall, that was our production strategy. Pretty straightforward, and we maintained the same strategy throughout the simulation. But we realized early on that there was, you should definitely approach the two segments, the AC camera and the UAV, in a different fashion because they have their own benefits in terms of how you, price the compensation and work it. All right.
So our financial strategy was, especially towards the end of the game, was the continual repurchase of stock until we reached the minimum 15,000 that we're allowed to have. That increases the stock price and the return on investment, and it's what we believe Team A was doing to just maximize the way that their return on investment and stock price was. We would also strive to reach a better economy of scales, our profitability ratio, our gross profit margin, our operating profit margin, and our net profit margin, as you can see highlighted in the little picture down below. We were pretty low on all of those margins in comparison to the rest of the simulation. And we feel that if we would have increased our profitability in those margins, as well as been able to increase our stock price and return on investment, our ROE, we would have been definitely in first place, like by a long shot, instead of just 2 points into second, which we're still very proud of, but first place is first place. And then you want to move on to the next one?
All right.
Future competitive strategy. So like I said, we would have eventually solidified first place once Team A reached 15,000 in their minimum stock requirement, and we reached 15,000. It would have came down to who's bigger, which we definitely brought a bigger stick to the simulation than they did. Our company was huge. It was efficient for the most part. We just had a couple issues, but we would eventually catch up to the minimum with them. Then it would come down to market share and prices, and our goal would to be eventually to get that 50% of the market shares, which we were already well on our way in the action camera. And then we would try to get it in the UAV drone. And that would probably be super beneficial for us. We would basically be the only name in town. We were already the name brand in our eyes. 20% of the market of the action cameras in the market are action cameras. Someone reaches in the cabinet and pulls one out, the 1 in 5 chance it's going to be ours. And I'm pretty proud of that.
Absolutely. So the most valuable takeaways, definitely leveraging stock repurchase early on in the game, because I believe year 12 is when we actually started repurchasing stock. So if we would have done that early on, as you know, it's a simple supply and demand relationship. The less supply out there, the higher demand, your prices will increase. So, that's why Team A did have, in terms of placement, they did have an advantage, because I'd like to note the 15,000 minimum is actually 15 million. So they had 2 million less stock, or less shares of stock out there than us. So that's definitely something to consider. But definitely, it's a tactic that you want to gun for early on. You don't want to initiate a game of catch up like we were trying to do. But we did stick in there the majority of the simulation, just based on our marketing, product offerings, and just basic practices. So communication, collaboration is obviously important. Without each other, our rank, we probably wouldn't have placed as well. Brainstorming, it's utterly important. Definitely want to get together, talk about possible strategies, and then make a decision. Respect is obviously important as well. So I added a few other things on here too. And risk taking is important, and battling for market share to profit, because we really realized how the impact that we had on other companies when we started trying to soak up as much market as possible. Because I remember in Latin America for the AC camera, we were at over 25% that last year. So, it's important to really understand how you're positioning your product through the quality, price, and then obviously, the way that you're marketing it. And another thing to keep in mind too is the contract offers. Those are important too, because those can help your overall metrics like ROE, stock price, all those key things. So definitely important. But that wraps it up for the takeaways. And then this is the closing slide. So thank you. And obviously, Mr. Hensley, if you have any questions, feel free to ask. And then we included our contact info. So thank you.